Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news some of the edges going off some key international metrics. Washington may be gripped by the culture wars, but we're going to stay firmly focused on the data. The final reading for the US second quarter 2018 GDP growth was unchanged from the prior estimates, but the core PCE inflation measure was revised higher to 2.1%. This is the inflation data the Fed prefers. And US durable goods orders rose strongly in August, up 4.5% from the rate from July and much more than expected. Year on year, this data is up 13%. The capital goods component, the indication of future investment trends, went the other way, however, falling unexpectedly when a good rise was predicted. And their trade deficit swelled yet again in August, rising to $83 billion in the month compared with $72 billion in August 2017. Exports rose 7.7%, but imports rose 10.2% year on year. This is a significant deterioration. Industry analysts are reporting that American car sales in September likely fell 6% from the same month a year ago. The weather is one reason, they say. Further, pending home sales fell in August again and now have decreased on an annual basis for 8 straight months. Across the Atlantic, EU economic confidence fell in September, pushed down by lower consumer confidence, while business confidence, which dipped in July, held at the lower level. Meanwhile, German inflation took a bit of a surprise jump in September, up to 2.3%, and considerably above the 2% rate expected. Rising energy costs had a bigger impact than expected. The IMF overnight said it would provide a bigger bailout to Argentina than originally planned and front-load it significantly in an effort to restore market confidence in the country. The rescue package has been increased by almost 15%, and now more than 85% of it will be delivered in the first year of the 3-year arrangement. The WTO has downgraded its outlook for trade, seeing world trade growth slip to 3.7% this year, down from a 4.4% rise forecast 6 months ago. A lot of that slowing will be felt by emerging economies. New data in China shows factories are coming under some signs of strain from the trade war with the US. Profit growth decelerated for the 4th month in a row. Those profits were up 9% from August 2017, a slowing from a 16% rise in July. It may be a slowing, but it's still a very good result. In Southeast Asia, there was central bank action overnight. Indonesia raised its benchmark rate again for the 5th time in 6 reviews, up by 25 basis points to 5.75%. In the Philippines, the rise was 50 basis points up to 4.5%. Through all this, Wall Street is modestly higher in mid-afternoon trading. Yesterday, both Shanghai and Hong Kong posted modest declines. The greenback is stronger today. In Australia, a CBA-owned bank is raising mortgage rates again. Bankwest is raising rates by 15 basis points, which means their new standard floating rate is 5.57% for an owner-occupied principal interest borrower and 5.92% for an interest-only borrower. At these levels, Aussie floating rates are now quite similar to the equivalent Kiwi rates. US Treasury 10-year yield is unchanged at 3.06%, while their 2-10 curve keeps falling and is now at just 22 basis points. The Aussie government 10-year is at 2.69%, down 5 basis points. The China government 10-year is at 3.66%, down 2 basis points, while the New Zealand government 10-year is at 2.68%, down 3 basis points. And gold is down sharply by $12 an ounce at $1,184 an ounce in New York. US oil prices are higher today at just over $72 a barrel, with the Brent benchmark just under $82 a barrel. And the Kiwi dollar is down more than half a cent against the greenback at 66.2 US cents. On the cross rates, we're a little firmer at 91.8 Aussie cents and 56.8 Euro cents. That puts the TWI at 70.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.